You've come a long way since October when I first had you on Squawk Alley at the stock exchange. I see you got the picture there in the background. $3.9 billion, I believe, was the valuation you had then, and you're well above that now today. I don't know that I've ever seen higher expectations for a newly public company. Biggest software IPO ever at 120 a share. Right now we're at what, 275-ish? You're the market cap, above the market cap of VMware, which started with virtualization and broadened out considerably. Is Snowflake's story going to be even broader than the one you told in the prospectus?
Well, you know, we stick to what we obviously what we said in the prospectus, but I think in the prospectus, you know, we laid out as best we could, you know, what we think is the full potential and scope of this opportunity. And you know, we talked all week to investors about, you know, what the full ambition is of this company. And obviously, you know, people are excited about that. They want to be part of this journey, and sort of brings us to where we are today.
Got to mention it's halted for volatility right after the open, so quite a bit of activity there. You got a lot of spending on sales and marketing, more than revenue. So tell me how you're measuring success over the near and even medium term. Is profitability even a thing that you should be talking about, that investors should be thinking about, or are you primarily focused on growth and on product?
Well, we are primarily focused on growth, but what we're not focused on is what people refer to as growth at all costs. And you can see in our numbers, you know, over the last year, certainly since Mike Scarpelli and I joined the company, that we have significantly bended the curve. We're driving up our unit economics, our gross margins, and our operating efficiency in every part of those expenditures is going up in leaps and bounds as well. And you can see in sales and marketing that as a percentage of revenue, it's coming down very, very fast. And, you know, we're focused on that. There's a lot of alignment that had to happen in the company, but we think that a lot of leverage in the model will come from sales and marketing. That's just the type of business that this is. Yeah.
Frank, you operate on multiple clouds, AWS, Azure, et cetera. But to what degree are Amazon, Microsoft, and Google dangerous to you as they try to do some of the things that you do in their own clouds? What would you say to investors who are concerned about that and wonder about the true legs of this multi-cloud story?
You know, I think that the public cloud companies are also sort of finding their footing and their bearing, you know, certainly at lower levels in the organization. You know, sometimes the hostilities break out, but when you sort of go up the ladder and you talk to the people who are sitting on top of those organizations, they understand that their platforms need to have innovation. They need best of breed. They need choice, right? Because if they don't have that, they become less competitive against their competitors, right? So it's sometimes a bit of an ambivalent situation. But you know, as we learn collectively as an industry, you know, sometimes we partner, sometimes we compete. Competition is not bad. You know, it makes all of us better. The customer benefits. So you can't sort of make too much of the fact that, you know, sometimes it gets pretty intense out there in the marketplace.
Now, this is the third company that you are taking public as CEO. There was Data Domain, there was ServiceNow, there's now Snowflake. I think a year ago when we talked, I asked you if you were open to doing something besides a traditional IPO, and you said yes. So why did you decide to go with this IPO process instead of a direct listing or a SPAC? And how do you think that affects what we're seeing here with this opening trade and the amount of money that you're taking back to the company?
Yeah, so you know, this, as you said, this is the third offering that Mike Scarpelli, our CFO, and I are doing together. And when we joined, we said, look, you know, we're going to assemble the consortium of investors that we want as a company very early on the journey, long before the IPO was even coming onto the radar. And then, you know, we as part of that process, you know, we had a tender offer, secondary offering earlier this year, where we very specifically started to transition our cap table to the investors that we wanted even before the IPO. And then we set ourselves up, you know, for those people also to become big buyers in the IPO. So what you're seeing is a highly orchestrated process. This is an extremely heavily vetted company because all those investors have been doing work and researching and talking to our customers on Snowflake for the better part of a year. You have to be able to direct stock to those companies and really enable them to build the positions that we want them to have over a long period of time. So this is not a process where we have a 1 week IPO roadshow, and then all of a sudden people put their orders in and it goes from there. This thing has been in the works, as I said, for the better part of a year, and that's where the IPO process really works for us. I mean, as frothy and as it looks today, this is just a hot deal, and we will just have to sort of live with the consequences of that. But we're focused on who are the long-term investors that we want to have with us, for the duration, 3 years, 5 years, 10 years, and those are the people that we went after, and we feel very fortunate that they are a part of this deal.